This is Blaine Young from InCamos.ca, and we're talking with Garth Rustand. Garth is the executive director of the website Investors Aid Cooperative of Canada. Garth, how are you doing this afternoon?
Good. Great to talk to you, Blaine.
We met about 2-3 weeks ago, and I'd never heard of your service before. Can you tell us about it?
Well, I'll make it as short as I can. I've been in the investment industry for about 22 years. I ended up working for Merrill Lynch and Wood Gundy. And while I was there, I started to realize that I didn't feel very good about the work I was doing. Now, you have to understand that everything you're trained to do in the investment industry is basically how to sell a lot of product and make as much money for the firm as you can. So that was making me feel a bit nervous. And also, I got a study that came across my desk from the United States, a big research firm called Dalbar. And what it had done is they'd gone back to find out exactly what investor returns were. Now, you'd think that investor returns are the same as the mutual fund returns or the stock returns that people get, but they're actually entirely different. Mutual fund returns are audited. We all know that they're accurate. But what happens with investors is that their behavior gets in the way. So they found that the average return over an 18-year period that ended in 2003 was about 2.5% on average for those years. And so you're thinking, well, gee, that sounds really low. And then you look at the S&P 500 for that same 18-year period, it had averaged 12.2% a year. So why was there such a big difference?
That is a huge difference. Why is that? Why is the difference so big in the returns that we get?
What the survey found was that it was mainly people's behavior. In other words, they were buying at the top when everybody else was buying, then they were selling at the bottom. That was a really big issue. The second thing was cost. Up here in Canada, we pay the highest costs in the world, so the returns might have been even lower. So after reading this, I thought, gee, that's probably what's happening to a lot of people up here, but we don't have Canadian research like that. So anyways, I decided, a couple of other reasons, personal reasons, I decided to sell my practice, and I left the industry and began doing research on the investor side just to see what the experience was. The first thing you find out is that, those returns are, those low returns are accurate. There was another study done by the Harvard Business School that found that, this is even funnier, really. This is for people it compared the returns of people who were investing on their own at a discount broker and with someone who was working with an advisor. And they found that if you worked with an advisor, your returns were half as much as the person working at a discount broker. Now, how does that happen? Supposedly advisors are there to give you some good advice, to find you funds that are going to do well or find you investments that are going to do well. But in the end, it looks as though mainly the advisors are there to charge you commission. So anyway, that was a Harvard Business School study that found that, again, average returns over the period of the study were about 3%, just a little higher than the 2.5%. And then there was another big study that came out that included Canada specifically, again from the Harvard Business School, and it found that Canada's investment costs were the highest in the world, and not by a little bit.
Our costs in Canada are the highest in the world? Like how much higher? 10%? 50%?
They're about 60% higher than the U.S. cost, but over 200% higher than costs in Europe. Right. Now, when you do a little bit of quick math here, you realize that if you're paying 2.8% or 2.5% to manage your portfolio, right, there just isn't a lot left. Average returns are only about 6%, 7%. So it's taking about, and this is what the studies found, it's taking about half your returns.
It sounds like from what you learned from these studies didn't sit well with you. What did you do?
What I decided to do was to, first of all, I wrote some courses, and I had a private company. The private company, though, trust is a big issue. The investment industry works in a huge conflict of interest. In other words, advisors at the firms that you go in to talk to, typically, they're all selling their own product. So even though they sign off on a document that says you have to put the client's interest first, they get paid so much to recommend their own firm's product that they do that, even though there might be other better products somewhere else. So people have never had a huge amount of trust in their advisors. So we felt that it was a better idea to have a more open structure. So we decided to set up a co-op that's run by the members, for the members, and we don't sell any investments. We don't manage any investments. But what we do is make sure that people know which are the best products, how to reduce their costs, and where to find the best advisory option.
So the financial aid co-op isn't like a typical financial advisor where you manage people's money.
No, we're closer. We're more like Lemonade, the car books.
Right. Okay.
So we give everybody the information they need to work on their own. But we have a whole bunch of consumer reports there that help you to reduce your costs by up to 80 or 90%. We have a report on strategies, on how to make sure your investments are safe. All sorts of consumer reports there. There are directories. There are product listings, best portfolios. And this is an interesting thing. The portfolios that we recommended have products in them that we then go back to see how well they've done. So when we look at, it's all there on the home page, but when you look at the products, we go back and do the 5-year returns on those. We find that the products that the co-op recommends have outperformed between 85 and 95% of all the other products out there. So we know that the approach that we take, the products we recommend, are doing extremely well. So that's the main thing. But we're closer to, we're there to help people who work on their own get the right products, the right options, and also to help people who work with advisors to get their costs down.
Okay, Garth, we're going to take a break here, and when we come back, I want you to tell us more about other services you offer to your members. You're listening to InCamels.ca Q&A, and today we're talking with Garth Rustand, the Executive Director of Investors Aid Co-op of Canada, and you'll find their website at www.investors-aid.coop. We'll be right back. Welcome back to InCamels.ca Q&A, and today we're talking with Garth Rustand, the founder and executive director of Investors Aid Co-op of Canada. And before the break, Garth was telling us that the Investors Aid Co-op is like the Lemonade book about cars, only it is for do-it-yourself investors. And you can find their website on the internet at www.investors-aid.coop. Garth, you were also telling us that the Investors Aid Co-op offers portfolio recommendations, which actually outperform 85 to 95% of the other financial products out there. That's a great example of how, like you say, educate your members about the best investment products. And you also show members how to reduce their investment costs, as well as where to find the best advisory options. What else do you do?
We also post on the site, we post the industry discounts that aren't publicized. In other words, just about all costs in the investment industry are negotiable. There's just a couple that aren't. But there's about 18 other costs that are negotiable, and you can go, if you switch your accounts around, if you go into, if you're going to change products, you can generally make huge deals for yourself. So we post all those discounts on the site as well.
This is new information to me. I never knew that before.
Well, there are a couple of issues. The one difficult thing with investing is most costs are hidden. So when you're using a mutual fund, for example, that cost that they charge you to manage that, and the commissions are all hidden. You may know that there's a cost there, but it doesn't show up on your statement, and the advisor may tell you about it, but again, you don't see it. There's not a charge that you don't get a bill for the amount of money that you pay. So that's one issue. The other is that some of the costs are just we don't. It's funny, if we go to buy a car, we assume we're going to dicker and we're going to get a better price because we're going to do research to make sure. But when we go in, for some reason, we go into a bank or we go into an investment firm, and we don't think that. We think that the costs are fixed, that there's not much we can do about it.
Garth, I bet 99% of Canadians don't know that they can negotiate costs on their investments. Why is it that we haven't learned about this before?
Because that's the way the advisors want us to think. So we make sure that we're trying to make sure that consumers are better educated when they go and talk to their advisors.
Well, that's really great information. And let me just repeat what you just said for our listeners. When you're dealing with your financial advisor and you're investing your money, and let's say I'll call it buying an investment because it's no different than buying a car in the sense that you're handing over your money for someone for a product. And in this case, the product is an investment. So what you're saying is that you can dicker about the costs associated with buying that investment, just like you can dicker not on the price of well, you can dicker on the price of the car, but you're not dickering on the investment per se, but you're dickering on the cost of purchasing that investment, right? And you've posted a list of all the fees that you can negotiate with your advisor on your website, investorsaid.coop. Okay, go ahead, Garth.
Another really interesting thing that cost is not just cost. It's not just you're going to pay less and maybe you get fewer services. The lower the cost you pay, the better your returns are, and also the higher the quality of the investments you're going to get. And I won't go into all of it, but that's basically the way it is.
Yeah, that seems ironic. I mean, that's something that we can talk about in a future interview, but typically,
sure,
so what you're saying is often if you pay less, you're going to get a better product.
Yes.
Oh, wow, that's different than,
You're going to get. Well, let's put it this way.
Yeah.
The best investment products are the cheapest. To give you an example, if you were to buy an exchange-traded fund, which is a lot like a mutual fund, the annual cost is 0.17%. If you were to buy a mutual fund that tries to do the same thing, you could be paying as much as 2.5%, 2.8%. So way more than 10 times as much. Plus, while the cheap one guarantees that you're going to hit the benchmark, the one you're paying more than 10 times for probably isn't going to beat its benchmark. So, and the quality of the stocks the quality of the holdings in the low-cost one are far better. And generally, so it's a bit of an odd situation where the lower your costs are, the better you're going to do, the higher your returns are going to be, and the better your better quality and less risk you have.
Wow. So, Garth, this sounds really good. And before you had created Investors Aid Cooperative of Canada, had you seen another website like this or another cooperative out there in the world, or is this the first one?
This is the first one. I mean, this is the first one for consumers. There are like credit unions or co-ops as well.
Sure. Okay.
They work pretty much like banks. But yeah, we're the only co-op for consumers, investment co-op for consumers.
And what type of investment knowledge does someone need to have in order to benefit from using the Investors Aid Cooperative? For example, what I mean is there are a group of people who think they don't know anything about investments, and let's call them beginners for lack of a better word. There's another group of people who, let's say they're in the middle because they have investment knowledge. They'll know what a mutual fund is, what an ETF is, and they might even manage their own investments through a self-directed RSP, for example. And then there's experts who investing is what they do on a daily basis, maybe their job, or not their job, but maybe they have the means to do it on a daily basis. But going back to the beginners again, Garth, do you have the Investors Aid Co-op website set up so that even beginners will benefit from it?
Yeah, we do. We post portfolios for beginners, so anybody can. One of the best places for beginning investors is to use what are called TDE funds. They're just very, very low cost index funds.
Sorry, Garth, what were those funds called?
It's TD. They're run by TD Bank.
Yeah.
And they are the lowest cost mutual funds in the country, and they have some very good products. What we've done is we've chosen the best products from that group of funds put them in portfolios, and those are the ones that are there for beginners, or, I mean, even for people who just want to, mutual funds are an easy way to do it as long as it's cheap and you have the right ones. So we put portfolios there for beginners, or even people who just want to, a friend of mine, he's a prof over at UBC, that's what he uses, because he just doesn't want the hassle of goofing around with stocks or whatever.
Right.
Now, I have to say, we don't follow stocks at all, okay?
Okay.
And the reason is that it's too difficult for individuals to choose stocks and not get hurt.
Yes.
It's just, we read about people who pick the right stocks, but when you go through track records of professionals, you find out that the track records are good during a rising market. They fall flat, and they rarely beat a simple benchmark.
Okay. Compared to a mutual fund portfolio or ETFs.
Yeah, exactly.
Okay, I understand that. Okay.
Trading is, for most people, is just too dangerous.
It's hard to. Yeah, sorry. It's the emotional part of it is a huge part.
The emotional part of it's very difficult. I mean, it may come down to, you go down and you look at your portfolio in the morning and you're in a good mood, so you'll buy some stock, and maybe the next morning you'll go down and you're in a bad mood and you'll sell some stocks. But there's really too much emotion in it. It can be too scary in a down market, and it can be too thrilling almost in a rising market.
Yeah, you bet. Yeah, been there.
So you just really have to take and the net effect is you're probably not going to outperform just a simple low cost vehicle that you really don't have to worry about.
Sure. Okay, we're going to take a break here, and when we come back, Garth is going to share with us more information about the Investors Aid Co-op of Canada website, and the first thing that you need to know in order to take advantage of all the information it contains, so you can immediately start investing your money smarter. We'll be right back. Okay, we're back for the final installment of InCamlos.ca Q&A, and today we're talking with Garth Rustand, who is the founder and executive director of Investors Aid Cooperative of Canada, which is a website that helps you find the right investments for you and maximizing your return on investments, as well as share some secrets about the investment industry. So Garth, someone can go to your website, investors-aid.coop, investors-aid.coop. And
that's right.
How do they participate? I see there it says there's a member login, so tell us about that.
As long as you become a member.
And what does that involve?
So if you can become a member for a lifetime membership is $45.
Okay.
And that gives you access to all the information, all the different services, that kind of thing. And there are two books that you might find useful. One is the Guide to Protecting Investment Returns, and the Investor Protection Workbook, which actually has the portfolios, the best portfolios laid out, and you can get those plus the lifetime membership for $78.
Oh, okay. So there's add-ons, and that just goes into the member price that you want to pay. So are those e-books, Garth, or are those books that they receive in the mail?
Those are real books. We mail them out to you.
Okay.
And there's pictures of them there. And also we have we have also an IA Passport. And it's a package that includes a lifetime membership, the books, and also an annual discount on a lot of the services that are there. And you can get that for $153, but that includes everything as well.
Right, and those are lifetime, just one-time fees.
It's a one-time fee for the lifetime membership, but the passport itself is only for 1 year, and then you'd have to renew it.
Oh, okay, I understand.
Okay.
Yeah.
Yeah.
So what if you're...
We've got another...
Yeah, go ahead, Garth.
Just a couple of things that your listeners might be interested in. Right now in Canada, there's very little consumer protection for investors and savers. So we have a dispute support service, and that allows people, if they have a run-in with an investment firm or an advisor, we can help them. Get through the process. Also, we can put them in contact with, if it gets really bad and they've lost a fair bit of money, we can put them in contact with a lawyer who can help them. We also have online. Go ahead.
Yeah, no, that would be in a situation, for example, where a client felt that their financial advisor was negligent and consequently they've lost money.
Yeah, if you've lost, like say if you're retired and you had, as an example, say you had all of your assets in stocks, and then the market went down and you lost, say, 20 or 30% of your portfolio. I think you'd be pretty peeved at that, and probably you'd have grounds for complaint.
Right, because
So
if
if
yeah, a
you
person
because
at that
you know
stage of life wants more security of their
exactly. So
savings.
you're going to need a balanced portfolio, but unfortunately, advisors get paid a lot more to have equity in your portfolio than they would in fixed income bonds, GICs, the safer stuff. So we have the dispute service there. You know, if you felt that you had lost a lot of money, it was untoward. We've got one member in Kelowna who's I can't remember how old his father was. I think he was like 88, and the advisor put him into a bunch of deferred sales charge funds, where the deferred sales charge doesn't expire for another 6 years. So you know, I mean that's not good advice. So anyway, we're there to help people who have difficulty. We also have online help. So if you have a question about your investments, we aren't going to say, well, you've got crap now and you should have better stuff. We'll kind of guide you around the website, but we can help you on transfers and best places to go for advice and that sort of thing. So we have online help, so yeah.
Yeah, so Garth, so the help is so when someone becomes a member, and I'm going to become a member, you know, if I have questions or if I want advice, and I'm expecting to get that from Investors Aid, is there, you know, there's a 1-800 number, which I reached you at. Is there a real person at the other end that a person can talk to and ask questions like we're doing in this interview, where you get real-time feedback on your questions and advice? How does that work?
You know, all the information that people need to improve their portfolios is on the website. But it's like, even if you're working on your own car, say, you may not have the confidence to go out and do it. So I think that's the biggest holdup for most people. So we have the online help. If you call in, you might be talking to me. You may be talking to one of the other people who are on our advisory board. If you send in an email, it's either going to go to me or it's going to be going to somebody who has more expertise in the area that the question comes from.
Okay.
So you can always get somebody to talk to. You can always get an answer to your emails. And so that's pretty much how it works.
Wow, that's great. Yeah, I think this is a phenomenal service, Garth.
Well, I'm glad. I'm hoping that more people will join. And I was going to mention, right now we're focused on investments and savings, and everything you need is there. But we're going to be adding some information on other consumer services like mortgages and lines of credit, credit cards. And there isn't going to be a lot there because a lot of that's common sense.
Right.
But we will be able to add some good consumer information there to more cover off the bases as far as, you know, people's issues with debt and that sort of thing.